Good evening, everyone. I'm really sorry I'm late. I literally just got back. Important things to talk about. The market showed us a massive gap up. You all know that. And GIFT Nifty is still higher. You can see that on the screen. But I think something's brewing for tomorrow. And this is not fact driven. But the address from Trump, as we all talked about in the post as well, what we want to discuss today is what are the next triggers? And obviously, the most important trigger is Trump's address tomorrow. And I was just looking at Bloomberg television, and this is the statement that Donald Trump has given just a few minutes back, where he's again saying what he'd said on Monday, that what matters most to him for a ceasefire is that the Hormuz Strait opens. And as most of the market is expecting, and that is the reason why the markets have risen today, they're expecting that Trump will announce the US's withdrawal tomorrow morning. Now, given this statement and given the movement in crude oil, I highly doubt that because crude has not moved. It's fallen by barely 1%. If you say from maybe the peak close to this, maybe you could say 5%. But the kind of fall we should see should be much greater. It should not have consolidated back from here. So crude isn't really signaling that something great is happening. Hey, Sniper Dog, how are you? Hey, Rudra, good evening. Thank you guys for still turning up. I missed my timeline today. But Bangalore traffic, for anyone who lives here, you know how it is. Coming back to what we were discussing, right? So the trade right now is very dependent on the taco trade, right? That Trump always chickens out. I don't know how that happens. I know that that's the narrative being shared in all media outlets, basically. But it feels more like a bull trap than a bear trap to me. And honestly, I've changed my positions. I'll get to that in 1 minute. I've significantly changed my short positions, but I'm still short. Now I'm as short again as I was close to the peak. A little less than I was at the peak, if you count multiple folios. But I'm still quite short. And I'm still in profit in many of the shorts, but I've started new ones as well, which I'll discuss in 2 minutes, the exact trades. But the reason why I don't think a positive news comes out tomorrow, a big positive news comes out tomorrow, is because of the scenarios created, right? So the first scenario we have is that what the market is expecting, Trump comes out and says that he's going to end the war in Iran over the next week or 10 days, and they'll slowly come out, or maybe even a day. And then the markets might rally immediately. They should, right? We should see GIFT Nifty gap up 3% or 4%. But I don't think that stays for a week because we have to wait for Iran to respond. First up, if Trump comes out without the Hormuz Strait opening, I think the market won't rise. It might for a few hours, but I think it will crash even more because that means that the Middle East has basically been left in a power vacuum, which will be taken over by Iran. And Iran's parliament has already passed a law of sorts that they can charge ships for crossing through the strait. And if anyone here believes that they let Western ships, US-based ships, pass through, that's not going to happen. Because they've been very clear that the only way the Hormuz Strait opens is if the US withdraws completely from the Middle East. All the bases are gone. That's not going to happen, right? We all know that's not going to happen. It took them decades to build that. Second part is how the OPEC nations, not necessarily the OPEC nations, the GCC nations will respond. I'll get to that, Bhakti. Give me 2 minutes. Hey, Meher, how are you? So the GCC nations, put yourselves in their shoes, right? Trump started a war that has hurt them. It hasn't hurt the US. Not a single bomb has fallen on the US, right? The only countries who had to face this is the GCC nations so far, or the Eastern nations through crude oil. How are they going to respond? Not well, right? They're going to say that you abandoned us in our time of need, and then we might get the second oil shock, similar to the 1970s, where Gulf nations banned oil transport to the West. And that becomes another problem of its own. So the idea here is, even if the first scenario plays out, where Donald Trump says we'll push out in 2 weeks or so, because of Iran's response and GCC's response, that will get even worse. Hi, Sunshine. Now the second scenario where Donald Trump comes out and gives us an ultimatum of sorts, right? Says to Iran that you either end your blockage of Hormuz today, or we're going to do X, Y, and Z. That's the worst case scenario for the markets, because that means Donald Trump has to come in with troops, and that means oil goes to 140. Maybe over 2 to 3 days, GIFT Nifty goes 2-3% down. But what is the upside here? For me to buy today, I couldn't see that. I can't see a reason to buy because 90% of tomorrow's good news has been baked in already. Sorry about the background noise. I didn't get the time to close my windows today because it was all rushed. But that's the core idea, right? If there was to be good news, it's almost already baked in. And most likely it cannot be good news, because how can the US leave the Middle East right now without worsening the situation from a GCC point of view, from Iran point of view? So that's why I don't expect good news tomorrow, and that's why I'm shocked. Now, I'll just take the Lakshmi Organics for a question, and then we'll move to the kind of positions or what new positions I have built, right? So, has exposure to fertilizers, which can't be great for the company. My problem with, well, with I was going to talk about my problem with chemical stocks right now in general, is that their costs have risen a lot. Even to ether industries, I wouldn't buy at these prices. I'd probably book profits. The idea being that most, and pharma, right, which I'll get to in a minute when I talk about new shorts, but chemical companies are going to see their costs rise, and not just for raw materials but also for the transport of the finished products. So they'll be beaten up from both ends. Now, petrochemicals make a big part of their input products. So even if we leave the closure of Strait of Hormuz from a strictly supply point of view, meaning their raw material point of view, even the crude they'll need here or petroleum products they'll need here will be more expensive. So that is a double whammy for all chemical companies. That's why I'm staying away from them a little bit. And that brings me to pharma stocks as well, right? I think I mentioned in the last live that I'm going short on pharma stocks. I've shorted Lupin, and I'm looking to add more. I really wanted to add more today, but I feel like maybe there's 1 or 2 more days of short covering left in the rally. If not, I'm happy with my short position. I don't want to be greedy, but I'm really looking at shorting pharma. So Lupin, I've already gone short on. This gave me the best entry point and buffer, right? It gave me a good exit point as well, was the idea. That the high is so close, and it's a strong high. It's been rejected once in the past. So for me, this became a short, one, because of that. Second, the reason why pharma as a whole looks weak is nothing has been priced in here. It's been looked at as a defensive sector. But Indian pharma doesn't work like US ka pharma sector. No? Indian pharmaceutical is heavily export dependent, and for raw material, heavily import dependent. For example, Combiflam prices have gone up by 50-60% since the war started, but nobody's talking about that on any of the big news channels, right? But that's going to impact their margins significantly. Combiflam, paracetamol, or whichever form you want to pick, is paracetamol prices. Sorry, not Combiflam prices, but paracetamol is an important ingredient of Combiflam, of many other, of Dolo, of many other medicines, and their margins there will suffer. And this will apply to others as well, right? The trickle down effect will come in, and pharma will start to suffer. So I'm seeing a kind of top that happened in 2015, maybe not all the way down, because pharma will serve as a defensive sector, and as exports pick back up maybe 3 to 6 months down the line, they should recover. So I won't wait for this bigger fall, but for this bottom at 1900, about 2000 maybe, so 10-15% play, it feels very safe to me. It might even fall more, but that's why I've gone into shorting pharma. Even the likes of Divis are on my radar. I just don't have a good entry point for Divis, but it's also given a death crossover, right? So even technically, some good technical analysts will always tell you that that's a good time to short. The last death crossover, I believe, was here. And well, we all know what happened after that, right? 3,900 to 2,800. It's a 1,100 on 3,900. That's about a 30% drop. So, and Divis has a big lot size, if I'm not wrong. 100 shares. That's about a lakh. So pretty small lot size, maybe not risk reward wise, but yeah, that's my thesis around shorting this pharmaceutical sector. Okay, let's look at the questions. Right, Bhaktil. So the market did not rise from where it started. We did not rise as much as the other markets, and that's something that we knew, right? We've discussed it many times that the worst placed country for this situation is India. We are the most oil dependent on the Gulf nations. China is getting its oil rerouted through Russia. That's for sure. Or even if not, because they're more an autocratic country. I'm calling it autocratic. I know it's socialist, communist, however we want to call it, but it's not a very people dependent country. The people don't really have as much of a voice as they do here, which means that the government can take pressure for 6 to 12 months, can punish their citizens for 6 to 12 months, and still be okay with it. In India, the problem is the government can't do that. Like, they had to take the excise cut, right? 10 rupees excise cut per liter. China doesn't have to do that. They're okay with using petrol, diesel for just their industrial usage. We, on the other hand, have to focus on consumers. So China economically will not suffer as much as India would. China is also not a consumption-based economy, right? China is more an export-based economy. We are a consumption-based economy. So places us worst among the major economies, at least. So I would expect this to continue. I would expect the downturn in the market to continue. Now, I don't know what Trump is going to say tomorrow, but I have a feeling that he's going to make it worse. Now, is that immediately after his talk, or is it because Iran does something? Because if you guys remember, Iran gave a timeline. If I just show you here, right, Iran's attack timeline to major US companies. It expires 2 hours before Trump talks. At 4:30 a.m., the deadline expires. They threaten Apple, Microsoft, and everyone. That expires at 4:30. At 6:30, Trump comes for a talk. So if I was an Iranian leader, I would make my biggest attack happen when Donald Trump is talking. That's what I would be thinking about from an aggressive standpoint. Whatever I can do, if I want to hit one of the bigger companies, a bigger target, I would want to do it right before the president comes out and during the president's speech. So that whatever he's saying, if he says I'm backing out and that attack happens, he looks like a complete fool. And Donald Trump can't take that risk. His PR team won't let him take that risk. That seems like common sense to me. Which is why I feel like tomorrow something bad could happen. Now, I could be wrong about that, but I doubt that. I haven't hedged for it, because even if I'm wrong about that and the market does go up, it still has to come back down, because this can't end. Like in either scenario, even if Trump says I'm pulling out, he says I'm going to increase my tax, in any scenario, again, I raise that question to you. Tell me how it works out so that the market can go up in the next month or so. Things have to get worse, right? In either situation. KPIT is a brilliant stock, Sunshine. Like for long-term investors, especially at this entry point, I don't even need to see the chart. I saw it this day. KPIT is a brilliant stock. I'll just look at it so we can talk about direct prices. But it's a brilliant company for long-term. Right now, good entry point as well. Right, it's trading well below or very close to its previous peak. I would buy here. Now, I don't want KPIT Tech in my portfolio for the long term, because I have other stocks that I want within the technology space. But if someone is interested in this space, yeah, it's a wonderful stock to hold. At these prices, from a 3 to 5 year horizon, I don't see how anyone loses money. So I would, if it was one on my radar, I would definitely buy these prices. New India Assurance. Let me just look at someone else and then I'll come back to you. So the yen carry trade needs a much deeper discussion, if I'm being honest, Jyoti. So let's look at, it all depends on the Japanese bond yield, right? Do you guys know what the yen carry trade means here, or do you want me to expand on it? Just quickly give me a comment there. Let's say 10 year, right? That's the safest to look at. It's a very good question, a very global question. So if you notice, Japanese bond yields have kind of been going down for the past some 20 years or so. The reason behind that, even 30 years or so, the reason behind that is because the Japanese economy was stuck. They didn't have inflation, they didn't have growth, which is why money kept in Japan usually worked as just savings. You didn't have to worry about inflation. The problem, though, is, as always, finance people exploited that. So they'd borrow money from Japan at 0% interest rate, 1% interest rate, and they just put it in bonds in the US at 4%, 5%, right? Or anywhere where you get high returns safely. In India, for example, you get 7.5%. So you're making 6.5% free on debt you've raised. So you're not using your capital because you're taking a loan from the Japanese government. You're buying, you're taking a loan from the Japanese government in a way, and you're putting it here in other countries and making 6% free. Warren Buffett, in fact, did that last year. So he must be sitting on a pile of cash. He sold US stocks and did exactly this. Now, the yen carry trade reverse, I think what you mean is that the money is flowing back into Japan, right? So since the bond yield now has risen to 2.3, 2.4%, now if you bring in the currency change where the Japanese yen falls against the US dollar, so now investing in Japan, because you lose about 2%, more than 2% annually right now to the Japanese yen, right? We'll just look at that as well. So Japanese yen consistently weakens against the dollar, right? Now, if it continues to weaken, then any returns, the 2% return you're making, you lose here in the currency. So it makes no sense to make the carry trade. That's called the yen carry trade. You buy a loan in yen, and you take a loan in yen and you come and buy bonds in the US, you make a difference of 5-6%. That's not working out anymore. So people are basically giving back the money, and that's trillions. So that money has to go back because it's basically becoming mark-to-market losses. Then that flushes out a lot of liquidity from the system. This arguably is one of the biggest causes of liquidity draw from the world, paired with central banks keeping the rates higher, of course. But in terms of an external shock, which has been happening for like the last 2 years now, this is arguably the biggest reason behind that. Advanced enzyme. So look, operational efficiency, Supreet, can help you, right? But you can't do anything about external shocks. The same thing applies to advanced enzymes as well, right? It could be a great company. Like, I think Ether Industries is one of the best companies in India to own for the next 10 years. Period. Like, I'm putting it in the same league as owning a Page Industries, owning a PI Industries, Pidilite, even Asian Paints, HDFC, ICICI, if you're a low risk investor. I think Ether is arguably one of the best companies in India, but I wouldn't buy it because they're facing an external shock. The management can't do anything about that, right? I'm running a business. If the raw material I'm getting has become expensive worldwide, there's nothing I can do. I have to take a hit, either in volume by raising price or in my margin by keeping the price same and increasing my volume. So I wouldn't buy chemicals right now. If you remember, I told everyone that chemicals seem to be heading for a bull run. That stands. But after this shock, then I'll be going heavy on chemicals. Hey Raghav, I haven't talked about it per se. So short covering is part of bear markets, right? I've talked about this. In most cases, or most of the largest single day rallies have happened in bear markets, whether it's 2000 to 2004, whether it's 2008, 2007, 2008, even during COVID, right? I think the April month, I was looking at this on Z Business today. In fact, April month saw a massive double-digit rally in Nifty, even though it crashed after. So short covering rallies can happen, and that's why anyone who's shorting needs to make sure they have sufficient margin to cover it. But that does not mean the trend has changed. So I'm still staying with the trend that the market is headed low. This does not seem to be enough. Add to that, I don't know if you saw the news, but Oracle just made one of the biggest layoffs in their history. There is a debate about whether there were 30,000 layoffs or 18,000 layoffs. I talked to 12,000 layoffs. I talked to someone who's working at Oracle in the US, and they're saying there've only been 12,000 layoffs overall. And the news outlets are claiming that 12,000 layoffs happened in India and 30,000 overall. So I don't trust that, because I do trust the person I spoke to. But in either case, 12,000 is not a small number, right, for Oracle. And they're planning another one in October, from what I know. What that tells me is something that big is happening. And this is all AI, nothing else. One of two reasons, right? Either they don't need these people, or they've raised so much debt for AI that they need to cut costs to cover interest, or both, which is the worst case scenario. I think it's both. Now, with helium blocked out, AI is facing a major threat. So that if helium stays blocked out, AI bubble bursts. And that means you don't just have joblessness, you can't even get another job in any field. No, Sniper Dog, that's what I'm finding very confusing. So there are two parts to this. One is the president of Iran right now has no power. It's very, it's like a hydra. It's very divided. Different commanders have their own operational control. And right now, IRGC is the one leading. Iran's president is not the person making these decisions about war. So even if he had a softer tone, I doubt any impact coming out of that. More than that, not really. Because if you listen to what he said we're open to negotiate, or we would consider a ceasefire, right? We have the will for a ceasefire, but on our terms. He's not being softer. He's clearly saying exactly what he said all along. That if you want a ceasefire, get out of the Middle East, take all your ships away, pay us reparations, and promise us in some form that can be enforced that you will never attack us again. The US can't do any of those four things. So Jyoti, I'm still waiting because I think there's more downside in Bitcoin, but I am going to buy Bitcoin. Right now my exposure is 1.5%. I'm going to take it up to maybe even 5%, 3% about minimum, maybe even 5%. But I'd want to buy at 45. I'd want to accumulate till then. This is also a good entry point though. My first entry was here, 75 about. For different currencies, it was different entry points. Pardon me if I'm slurring today, right? It's been a long day of talking. Here 60 about is a good entry point, and then we have 45 as another level. Could go lower. Bitcoin has done that in the past, but I'm happy buying at 45 since it's only a 3% exposure. Because there's one of two things that happens to cryptocurrencies after this liquidity flush, right? This is the first liquidity flush that cryptocurrencies have had to face. They essentially became important after 2008, right? Before that, they might have existed, but they weren't important. So most of the money has flown in after 2008, and since then, they've never had to face a liquidity crisis. This is a liquidity crisis. If cryptocurrencies can survive this, then they are the assets of the future. Then I would move my allocation from gold to digital currencies, because then they would really be the future. Then they would go up to maybe 10-20% of my total portfolio allocation. Right now, 3%. Hospital stocks are probably safe bets, but the problem is most of India's hospital stocks trade at a premium. So when liquidity crunches come in globally, then they do fall because the P compression has to come in. So for example, the biggest one is Apollo Hospitals, right? We could look at Max as well similarly. You'd see they're also falling, not crashing, but I expect them to fall. Like they have to correct a little bit because 60 ka valuation seems very high. Now, they are safe sectors, but I wouldn't expect this to continue. This profit margin, if that's what we're looking at, it's because of extremely high earnings. Those earnings can't stay for too long. As maybe inflation comes in, right now, Apollo has a massive advantage in its this particular hospital. At least has a massive advantage with its app-based ecosystem, right, where you can order medicines, book tests, and all that coming under one. So Apollo does have that advantage, but their earnings have to suffer. It's just it's cyclical. I always work with this principle that when something goes up, it has to come down, and that has to happen. So I wouldn't buy hospitals at peak prices, but they're a safer sector. So if they fall enough, then yeah, to keep in a portfolio 10-12% CAGR annually, no problems with that. Hey there, right? So both are good companies, right? Let's say we look at HCC. The problem that these companies will face is that the government won't have money to spend. Good companies, right? They do an excellent job, but we know that the government's balance sheet is taking a hit. Now the government has to prioritize. Now, when I say the hit, don't just think about the 10 rupee per liter that the government is losing, which becomes lakhs of crores over in here. I also have to think about the 30,000 crores in dividend that OMCs paid the government. That's a lot of money coming out. That was basically a defense budget, right? So what does the government do? Where does it make space for that? They cannot sacrifice on whatever features they've come out for tier 2, tier 3 cities and the rural cities, and those PLIs that have been created in the subsidies. They can't do that because they lose elections. So they won't do that. Employment is already a problem, so they can't move it away from sectors that are creating some employment. So we look at manufacturing, we look at ESM, they have to keep them alive. Otherwise, we already have negative or zero employment growth in India over the past, white collar employment growth over the past 3 years or so, 4 years or so. 3 years, yeah. If they move away from those as well, then we get negative employment growth, which again loses them an election. Just thinking pragmatically, it makes situations worse as well, economically. So the only place where they can make cuts for me is railways and or infrastructure as a whole. We don't grow our infrastructure as fast as we want for the common man. It has to keep growing for industries. And then those industries can eventually pay for the infrastructure for the common man. That's how I would structure it if I was the decision maker. That's what I would do. That would be my first way of thinking. That's why these stocks would suffer. So it's not just HCC. I also like KNR Constructions, right? They recently won an order. I wouldn't get fooled by the 10% rally. Though this is still a good entry point, right? Not denying that. At these prices, one can't go wrong buying into these companies. It will 3x, maybe 3 years, 5 years, it will 3x. But at these prices, I won't buy because I think there's more of a fall come. Now, where does it stop? That I can't say. GR Infra is arguably the best of the lot in terms of execution and pedigree. That's also something you could look at. Sorry. Wait, Meher, what is this? 2,500 in India and 30,000 global? Oh, in terms of layoffs? So that's debatable. I know that most media outlets are saying 30,000. That's the article I read as well. But channel check tells me it's not. So I don't know about that. Syngene, transformers and rectifiers. PNG, I can give you directly good outlook. Trent, very good outlook. Gillette, very good outlook. Metro, good outlook. Jupiter Wagons, not really, mainly because Adani is coming into this sector. So Jupiter Wagons might struggle. Same for Tita Rail as well. E-Clerk's good. I mean, let me answer it this way. Of these, I would keep Trent in my portfolio for sure. Syngene, I'm not much interested in. I've already talked about it, right? The entire space is struggling. Transformers and rectifiers, I have to check the price. So the business has ample room, no doubt about it. But I think it has more room to correct. I really think it has more room to correct. The business, great. Procter & Gamble now depends on which one, right? You mean PGHH or PGHL? Healthcare, hygiene, which one? Yeah, hospital stocks are very expensive. That's the main problem. So de-dollarization, Jyoti, one, you're asking some insanely good questions. Kudos to that. So de-dollarization is something that if it does happen, it will break the system once. It has to break the system. It's like building a new foundation for your house, right? You got to break everything down. Or even if you want to somehow prop it up and create it, you at least have to empty the house because there's so much risk. So whenever the dollar breaks, if it breaks, I doubt it will, to be honest. I don't see the dollar or the petrodollar getting replaced so soon, unless the president, Donald Trump, does something crazy. If he pulls out of the Iran war and leaves the GCC countries hanging, then yeah, then de-dollarization becomes my base case. Because the only reason why dollar is still so important is the Gulf nations. China, Russia, India, Brazil, everyone's ready to let go of the dollar. It's only because of the petrodollar that it's surviving. So if Donald Trump declares tomorrow that this is what's happening and that's how GCC reacts, there's a lot of ifs, then de-dollarization happens. And if that is to happen, then we suffer quite a lot because that would shake up the entire system and everyone suffers. No one would be immune to that. So understand it this way. It's not just about the transaction, right? It's also about how the system was built for the dollar. Indian companies, Indian IT companies, which essentially employ all our consumption, right? Almost all our consumption comes from people who are working in the service sector, which is one way or another dependent on the IT sector. The top four accounting firms or this or that, they're dependent on IT. They're either the clients or the providers. So that system, IT, been built for dollars. What are they going to do all of a sudden? What currency are they going to move to? How are they going to trade with the US and then Europe and then China and then Russia? And how do they trade with everyone at the same time? And there's nothing constant. Then Bitcoin becomes constant. There's going to be questions raised about that. What becomes the constant? This is where I think I spoke about it last time and I requested you guys to read up on it, right? The digitization of money. That's how de-dollarization can happen, if money is digitized. But the cruel part is, even if that happens, most of the Bitcoin is now owned by companies in the US or the US, and they're buying in bulk. Even if that happens, well, the US still indirectly creates a new dollar, right? Keynes Tech, my entry point was about 2,500 Rudra. So 3,000, 2,500, I'd be happy entering. This would be my range, 3,000 about. I'd be happy entering that. Even at these prices, worth a shot at half from the peak, worth a shot. And the reason is that they're actually going to be building the chips. They're not just another data center company. Data center is a very low margin job. The chip building part is actually more higher margin, more niche. So Keynes, long term, most likely if the AI theme doesn't die off, then Keynes would be in my portfolio, most likely. Which would be my favorite sector if the market falls 10 to again? Wow. Okay. So if metals correct as much as I think they will, then metals would be one. It completely depends on corrections, but IT has been on my radar. I've talked about it multiple times. It's not falling anymore either, but I think there is one more fall in it. Maybe AI based, but there is one more fall. Seems like there's something else left. TCS is at very close to a perfect price. For me, I am long just a little bit for hedging, but I'm really keen to buy more. So IT would be one of my top picks, depending on how the global AI theme plays out. If it plays out even slightly positively, I'd go into it. Then metals are in a super cycle. There's no doubt about that. Again, the AI necessity comes in. Though the power sector also supports metals in a way, infrastructure also supports metals in a way. So the metals theme has many tailwinds, but they have to correct massively once because the global economy has to slow down. And then metals basically go circuit to circuit. If you notice, if I show you like a Nalco or pick a metal stock, right? Nalco, SAIL, Hindustan Zinc, whichever one you want to pick, they rise parabolic, and when they fall, they don't give you a chance. Like this, 126 to 69, about half, took 2 months. 8th April to 8th July, 3 months. Again here, 2024 ka fall hai, 250 to about again half, right? 140, but let's say half. Again happened in 2 to 3 months. So metals won't give you the time to short them once they start falling. Usually that doesn't happen. But then they rise again. That's what I'm expecting. I'm expecting something like this to happen again. Falls a lot and then goes up one more time before topping out. Maybe not a new high, but yeah, that'll be on my radar. Chemicals, of course. But there are also a lot of stocks that I'm very keen on. Like I really want to buy Page Industries. I really want to buy Oracle Financial Services. If there's one company that I really, really want to pick, if there's one stock that I really want to pick, barring something massively changing, it's going to be OFSS because it's a double whammy. It gives me a dividend and it's corrected so much. Of course, it's a stable stock. So my favorite of the lot, I'd say OFSS I really want to pick as long as the AI doesn't wipe it out. So Nifty, I've shared what my targets were, and I think we'll get to those. I know everyone is saying 21,500 wouldn't break. I feel like when that breaks is when you see the panic comes in. I don't see how we bottom at 25,500. We have to see a bear market. We have to fall by more than 20%. Anyone carrying put? So Nitesh, the put would be tough on you, know. So Procter and Gamble Health and Hygiene, right? PGHH. Let me just take a look. I haven't seen this one in a while. Give me just 2 minutes. It's a safety bet. No? It's a safe bet to go into. PE-wise seems at a good spot. Well, to be honest, if we don't pick up stocks like these at these prices, then when would we pick them up? Barring a massive promoter change, right? No change. Yeah, I would pick it up at these. Thank you for bringing it on my radar, if I'm being honest. Yeah, I would buy her. I'm going to add this to my list. I would buy her. At least one tranche. Half prices for a stock that is basically immune to recessions, right? Like their business isn't going to go anywhere. Yeah, I would buy. They don't even have enough competition in this field. HDFC, I'm looking to go long on RN. Not right now, but HDFC Bank is now one of the top picks to go long on in futures. You know, I could even go long here and I'll make money over 6 months, but I feel like maybe a little bit more. This would be my range. This would be where I'd just go, you know what? Sorry, this would be my range. I talked about this last video as well. 650 about, because it also coincides with this level, right? Right before the COVID crash. That's where I'd say, yeah, it makes a sure bet. One lot in each folio, ready to buy in one more lot if it falls another 10%. But yeah, I don't think this whole story about whatever's happening holds any merit. It just feels like we're trying to put pressure on the Indian economy, which I believe in. Many experts have said this, and I do believe that. It feels like external pressure on our economy. And HDFC Bank is one of the best ways to do that, right? One of the biggest banks in the world. Kiran, that's such a complex question. Okay, I'll just get to that, Kiran. Let me just take a couple more questions first, because that'll take some time, right? Gold, I'm looking to go long on. I feel like inflation is going to hit us, and when inflation hits, gold always rises. Right now, it's seeing a liquidity crunch, so I'm going to wait this out. Let the liquidity part settle down a little bit because people still haven't really sold. US may at least. India may people did face margin pressures and all that, but the US market hasn't fallen enough yet. So I'm waiting for the US markets to fall a bit more, with which I think gold might fall a bit more. And then if I get a good entry point, I'd go long on gold. Right now, the US dollar's strength has also kept gold prices up. We should technically be at 130,000, not 150. It's because Indian rupee has fallen by like 6% compared to the dollar that we're still at 150. So I'd wait for that region to come in, 125, 113, whichever form, and then yes, then I would go long. You're right. You're perfectly right, Supreet. Future earnings will be hit, and that's why I don't think we'll see a massive bull run. Because there are other problems as well, we'll probably see a bear market. But if we just leave everything as a side and focus on the Iran war, then we have to think about the markets being a discounting mechanism, right? Once the war ends, the market stops looking at the next quarter. stops looking at the next to next quarter. The market looks at the third quarter from here. And by then, earnings would have stabilized. So then people would start buying as well because they know that, okay, 2 months there'll be problems. But if a company is secure enough in its balance sheet that it can survive those 2 months with some version of profit, not getting into big trouble, then that company will make good profits in the third quarter for sure. So that discounting mechanism of the markets also has to come in. So if the war ends tomorrow in all forms, I am going to cut all my shorts and go long, at least a little bit. There'll be some shorts I'll still keep for the AI thing, for the private credit thing and whatnot. But on the sectors that suffered because of the Iran war, your OMCs, your aviation stocks, I'll go long on them then because they will give a large comeback. And I'm okay with waiting for 6 months if I have to. Warren Beverages, Asian Paints, Kalyan Jewelers, Zentech, Vinati Organics. So Vinati and Kaplan are not something I'd put in my portfolio, but the rest I would. I wouldn't have a problem if someone handed me a portfolio and said these are the 5 stocks. I'd say, yeah, it's a good portfolio. I'd want to go. I think I'm in loss, small loss though, not a big loss. Maybe like 2% up or something. But Bharat Forge, and I'm also going short on other steel stocks. They might see a small upside, but I don't see how, as the economy slows, steel does well. Because steel also needs a lot of power, right? It also needs like a forge of sorts. So that's going to get expensive, whether it's directly through power becoming expensive or through coal. So that is happening. And the problem is your large cap banks that work on legacy systems, Jyoti, they suffer the most. Are you using AI to create these questions? Because these are brilliant questions. I remember researching this, and the large banks, because their systems are so integrated to the current manner of running things, they'd suffer more. Your Bajaj Finance would probably be the best place there because they can quickly move, right? Your Geo Finance can be the best place there. They don't have a legacy system to change. Large banks will suffer. You have to understand, suddenly storage becomes unnecessary, right? You're on the blockchain where you don't need to store your money. You don't need a bank essentially. You don't need anyone to make that transfer. It's happening digitally across the world through a central interface. So technically, you don't need banks. Of course, banks will exist because the paperwork has to be done, and then requests have to be made, loans have to be issued. But for a depositor, it becomes a big headwind for the banks. I don't think Tata Steel will do well, Meher. I'm short on Tata Steel. I don't think, because when the economy is suffer, no, metals can do well when inflation hits in. That's why metal stocks are rising. But no one's factoring in that the economies will suffer. Okay, we have to look at Inox Wind. Give me a second. I know I've talked about this stock. I like it long term, and I'm loving that it's falling because it gives me a good entry point. So it's falling because of P. It's just falling because of valuations for now. And to be honest, it is a little expensive. ना 14,000 crore की company already नहीं होनी चाहिए इसको. Long term, story still holds. I don't think I have a problem buying these prices. It won't be a part of my portfolio because there are better stocks in the power sector. And I am not going to pick 10 stocks from the power sector. But if I had to pick 10 stocks from the power sector, this would most likely be one of them. One of my favorites, if I'm going short, small cap, would probably be Advait Energy. See, it hasn't even fallen a lot because this one has the highest potential. Like this could be a 50, 100 bag. Like it's a 200,000 crores, and they're planning to build 1 gigawatt of energy, and they're already executing. It's not like they're just words; they're genuinely doing things. Excuse me. So if I'm going, I would go maybe Advait Energy. Short Indian oil would be Sniper Dog if we get to a point where the war ends. Then ONGC, Indian Oil, Coal India, they all become shorts. But right now, it's too risky. Oh, I'm so sorry. I was thinking Oil India. Indian Oil Corporation, I'm already short on. Sorry, Sniper Dog. As I said, I'm a little tired today. But IOC, I'm already short on. Best power sector top 5. So I'm not researching. I'm just thinking off the top of my head. I might miss something. First name's Irida, without a doubt. Renewable energy has to become a thing. Irida will win long term. There's no doubt about it. Barring, of course, some kind of a scam. Though I doubt that will happen. Right. Another one is Adani Power. If BJP stays in power, Adani Power is doing a good job. There's Advait Energy because I want a small cap play. It should work well. To some extent, maybe even the likes of Bundada Engineering, but okay, maybe sticking to slightly larger companies here. I'm thinking Tata Power at the right entry point, but not really. What do I like more? Maybe a PSU, right? We could get an SJVN in there or a Nava in there. They would also do fairly well. And a pure transmission play could be something like Power Grid, maybe, because I want a pure transmission play. That would be my 5, 6 stocks that I'd look at. But you have to understand it's so situation dependent. When the time to buy comes in, we have to see how the government is shaping it all. Sorry, Rudra, I missed that message. Inox India, still love the company. Rainbow Children, love it. Concord Biotech, I haven't researched it enough to say too much about it, but the biotech space is looking very good. So I think when the experts in AI were asked about which sector would do best because of AI, outside of AI itself, meaning outside the tech sector itself, outside of your NVIDIAs and GPUs and chips and everything else, outside of that, all of them kind of go towards biotechnology. So that sector looks like it could be a hidden multi-bagger sector going forward. Gillette is a safe bet. At a good price, it can be a trade. It's not a company that I would buy and keep in my portfolio for 20 years. It's not going to give me those kind of returns. But it has these, you see these flash moves where it goes like 1.5x, 3x in 1 year. I want to pick those moves. I want to find out when that move will most likely happen and then try to ride it. Well, that's difficult to do. If it's timed perfectly, sure. Right now doesn't seem like the time to buy. I would buy if it comes to maybe 4,800, 5,000, then I'll buy. Otherwise, I wouldn't buy. Because isme I don't want to be a long-term investor. Isme I want to trade. Buy for 1 year, try to get 100% return, and then sell it off. Wait for the downturn, pick it up again. There are many stocks that work like that, right? Tata Motors is the perfect example of a stock that just does this. Now that they've broken into multiple, I hope that the chart can show you passenger vehicles, right? If you look at this, right? If you pick the stock at the right time, it'll give you multi-bagger returns. But then you have to sell it and wait for the fall again. Transrail lighting. I know there's many people saying that, but it's not a strong enough sector, Ashima. Let me just take a look at it. I won't pretend that I know enough about the company, but yeah. Okay. So the business looks solid, no doubt about it, but it's very recently listed. That's one issue I have. In terms of valuation, looks good. 14, 15, not bad. It's a private company as well. So 14 ka P, definitely not bad. Yeah, could be a good long-term bet. But I haven't researched the transmission sector as well as I would like to because I don't have the information I need. I've tried, but I don't have the information I need. It's so fickle. It is so fickle. The policies or the tenders change so quickly. The government payment patterns are so uh, inconsistent that it's very difficult to go into this sector and really understand कैसे चलेगा. Debtor days पता ही नहीं चलता. Receivables, right? You never get to know when the receivables will actually be received, so it becomes a little difficult. But the business looks solid, Ashma. TAC Infosec, I'm looking at it for the first time, so it will be a very cursory view. I'll need time. I will need time for this. Because if it's in cybersecurity, then that means we have to really know, and it's a very small market cap company. Anything I say is too risky. Right? If it was a big company, I could read a chart and tell you something, but it's less than 1,000 crores. So that means the business has to be understood really, really well. India Mart, see the business when they listed, right, was very, very interesting, but they should try to move B2C, more B2C. Because I would have been their customer like a dozen times by now if I had the option to be. Can it work with Make in India? Thoda difficult लगता है, Rudra. So I'm not a buyer in the company, but I'm not saying it's a bad company. EPAC good. EPAC Durable is a good company, Jyoti. This company has surprised me. I bought into it and I sold it. Didn't get a good enough return, but yeah, this company has. Though you have to know that this war is going to have a massive impact on this company, right? Their costs will rise. That might be one of the reasons why it's fallen, but their costs are going to rise. Yeah, let's see how that works out. Metro Brands. I'll take a look at it. So we know that this company is one of India's most recognized brands. There's no doubt about that. Why do you want to buy it, Rudra? What makes you excited about Metro Brands from a long term investor point of view? Because I see a lot of competition coming in. I see people who can really spend money are moving away from Metro. Like they're moving towards your entry level luxury, like Steve Madden's and all those, or like real luxury. Metro is kind of losing its footing, right? Because it's not meant for the the most common of men, right? It is meant for people with a certain amount of spending power, and then they are now moving into bigger brands, so to say, westernization of brands, right? And then those people who are still buying Indian brands, they arguably can't afford Metro's shoes. They're a little too expensive for them. They're buying stores like Sri Leathers, they're buying things like Sparks. So I think the placement of this company might be a little bit off. It could surprise me if they innovate suddenly. It feels a little bit off. Definitely are in 20,000, 21,000. Yeah, I'm not sure. I'm not sure because we've seen a short covering. Next one might come in 22,000, but I doubt. See, whatever happens next has to be big. The market remaining range bound maybe for a month, maybe as they figure everything out. If the announcement tomorrow is nothing, but given that Donald Trump's calling a press conference and Iran's timeline is matching with that, yeah, I think we should see something big happen tomorrow. Delivery, probably the most innovative in this logistics space. Their margins will be probably stronger because they're serving B2C a lot and they do a good job. So the company's business looks very, very good. Like I haven't used Blue Dart since I saw deliveries door pickup option. Sorry about that. So I don't think music is going anywhere. Definitely. But just out of subscriptions, how much money will you be able to make? Like you'll have India, mein, let's say we have maybe best case scenario, they get 40 crore subscribers, right? Not even going to get that, 25 crore subscribers. Wait, let me just look at this. 25 crore actually might make good profit. I think you're asking me for the second time, and I've always kind of held a bias against the company. Maybe I should take another look. Maybe I should look deeper into this company. Maybe something has changed. If you're asking me twice, there must be something. I'll take a look at this sniper dog. Maybe I'm missing something. CG Power, so the same thing, right, Ashima, with the power sector. Let me just take a look. Perfect. We know the business is good. There's never any doubt about that. Honest opinion, I don't see a problem with the business. As far as my understanding goes, I don't see a problem with the business. I see a problem with the chart, though. This is a very cyclical chart, kind of like Tata Motors, wala, no? It has a period where it grows a lot, and then it has a massive period where it does nothing. So multiple times we've seen this stock do that. I feel like maybe something like that might be on the charts here. Probably. Because for an average P of, what is its average P? It's here somewhere, like 10 maybe, and it's trading at 100 ka P. When it's profitable. I don't know if it's a good time to buy. Even though it's a great company, I don't know if the valuation is justified. War is over? Nitish? I don't think so. Unless something came out while I was talking. I really don't think so. Did we get a new piece of news? Or are you just kind of saying that? In fact, we're saying that Iran is rejecting them. Yeah, so I think this interview would perfectly frame what I was talking about. There are no good options here. That's what I've been saying since we started talking about the war. There are basically no good options. US can't retreat, it can't keep fighting. If it either case, we see a recession. Sorry, I was a little low. But at Bundada Engineering, yeah, I would want to keep this stock. I don't want to look at its price. I want to buy a lot away. I'll buy another lot maybe when if it falls. But till the story changes, I'd want to keep that stock. Sanduma. Okay. Sangvi movers. Let me take a look. On the right one. Yeah. Cyclical one, but it has corrected a lot. Very similar to the stock that Ashima asked about, but it has corrected a lot. So maybe even a decent point of entry if you have a piece of research that helps you. Isme, why wouldn't we go for something like Action Construction? It's a better run company. ACE, right? So if you're going in this field, I would probably go for ACE because you can see ACE everywhere. Though in terms of correction, it hasn't corrected enough. But this space isn't bad at all. This space is not bad at all. It's a good space to be in. Well, I mean, America should not leave. You can't start a war. This is like going to a bar, starting a fight with someone, calling your friend. Now that one person has 6 friends, they start beating your friends up, and what you do is you announce I'm out, and you leave while they're still fighting. That's a not just a cowardly thing to do. Will your friends ever trust you again if you leave them in the middle of a brawl that you started? They're not. That's not friendship. That's not honor. That's not morality. You can't show your face anywhere after you do that. So if the US backs out here, they don't just look like cowards. They don't just lose face. They lose the GCC and in effect lose the petrodollar, which would take us to what Jyoti was asking: the de-dollarization. That would lead to de-dollarization without a shadow of a doubt. So they can't. They basically cannot leave. Trump would have to be removed if he decides to do that. That's how big a deal it would be for the US. Moschip, and we have. I hope Trump doesn't do that because that would be a long-term problem. That'll be a very long-term problem. It might look like it's good for India, but it's not. It's not. We need a system. As much as I'd like that system to be like a cryptocurrency or something, but that is basically not centralized. Not that does not give all the power to one person. As much as I'd like that, it would be horrible for us because it breaks the system, and you never know who comes out of it after that. Okay, Unimec Aerospace. Give me a second. Too recently listed for me to give you anything technically. It's not a great business account. I've read very cursory, but it doesn't look like something I would do too much research. And I'm sorry, but it just doesn't feel like it there. Is there something that really excites you about this company? Maybe I'm missing something. Just a second, Amit. Let's look at Moisture. Please do let me know there. There is if I'm missing something, but if it's just maintenance of engines and all that, then how much growth can we really expect? So if the AI revolution plays out, then this is one of the plays for that. I do feel like there are better options because इस environment में ना I won't want to go for companies that are not first name brands, right? Like Keynes is a first name brand, right? Anantaraj is a first name brand. So if I want to play the AI and data center theme, I'd want to stick with leaders. Maybe Moschip will give a 10x return compared to those leaders. The problem is when a technology becomes game changing, like the internet was in 2000, 8 out of 10 companies don't survive, 2 do. More often than not, those two are the leaders. One of them is the leader and the other could be someone who broke through. I'd want to stick with those in each space. So maybe a small allocation, right? The business is what they're in is good, but I'd want to stick to low risk capital preservation. No? KEIs for pipes are going to face a problem naturally because there are crude oil derivatives used in pipe making. So they will face a bit of an issue that applies to KEI and polycap both. Eco recycling, I'll just take a look at. Should we start? So accumulation can start, but because again, I earn through this, I haven't bought too much. Nor do I intend to till I see a proper fall. It has to be a bear market. My research, the reason I was short was not because the Iran war started, right? It was not because Trump declared tariffs. I was short before that. I was short in September of 2024. Nothing bad was happening there. Everything was good in green. Nobody understood why FIS sold for 3 months. I told everyone that I'm going short because the Fed has cut rates and the markets have hit new highs. And historically, every time this happens, the market tops out. And we could all see that the consumption in India was going to come to an end. Fundamentally, that was there as a trigger. We could see that defaults were rising and whatnot. But that thesis is continuing till date, that when the cycle ends, it resets the market. Now, Iran war is just something that, for me right now, the way I'm looking at it is I'm still keeping the same short position I had. Just that the Iran war made me a bunch of money. Now, if the Nifty goes to 26,000 from here, sure, I'm back to where I was 2 months back, except I'm richer now. Because I made a good 30, 40, 30% return on my entire portfolio in this 1 month. I'm guessing here, right? I'm not saying that's exactly what I made, but I made a decent amount, maybe 20%, 25% on my portfolio. Just out of futures. I have zero stocks bought, just out of going short. So for me, what matters is I want to hold off till I can find a place where I think, yeah, this is enough. Because the market always overdoes it. At one point, when I think this is enough, I won't go long completely because, as I said, the market overdoes it on both sides. So if 21,500 is fair value, the market will correct to 19,000, 10% extra, just as it goes 10% higher on the bull side. It's a pendulum, right? The pendulum goes equal distance on both sides of the center. That's why I'm not buying. But to start accumulating, yeah, very good time to start accumulating. These are good prices for some excellent companies. So eco recycling we didn't really talk about, no? That's an interesting business. I don't know how big a business it can become yet, but for the data center theme, it's a very interesting business. I'd want to research it more for sure because this is new. This is new. What this company basically does is, again, very cursory, but e-waste meaning, let's say your computer has data that you need removed, but removing it, quote unquote, when you have trillions of, let's say, terabytes of data is one tougher time taking, and you probably want to store some form of it somewhere in case you need to recover it. So these guys kind of handle those kind of work, right? Now, of course, I could be a little wrong about this, Ashimas. That's why I want to read it. But it's an interesting business. It's a very unique business. Then we have KA Polycab, I already told you. Yeah, so the Onyx platform is one. China's already doing this billions. India's already piloting this. This looks like it might just happen. Now, whether it happens in this cycle or the next, I'm not sure. I don't know if we're forward enough within the blockchain technology as a whole. I don't think we have all the pillars in yet. But if this thing happens, then our banking sector suffers massively. And in effect, if banks suffer, your IT sector suffers. IT sector suffers, consumption suffers. And this won't be great, not in the short term, not in the immediate term. Captive power supply to unlisted Indian data centers. Clean Max. I've never worked with this company. Clean Max Environmental Energy Solutions. Very interesting name. It's too recently listed, my friend. And see, the problem is now it's listing at a 181 ka PE, which means IPO came out expensive. IPO पे 100% return मिला होगा और ज़्यादा तो नहीं मिला होगा ना. 2026 में there haven't been any IPOs that gave you 100% return. So, which means it was sold expensive. So the stock has to correct before being bought. I'm almost certain it will correct. Almost being the operative word here. Gravita India. Wait, just a second. I missed a question there. Keynes, Ether Industries, PI Industries, Asian Paints, Warren Beverages, Paradeep Phosphates, all are brilliant companies. I would buy them as well, but in tranches. Now, don't buy them because I really like them, Rudra. I hope that you've seen those companies and you like those companies. I have very strong reasons for liking each of them. But remember, all of these are high risk, right? None of these are safe companies. These are high beta companies. So if I'm buying into them, I know that I'm expecting a 1.4, 1.5 beta on the market. With that in mind, if you still think that's within your risk profile, then go ahead. Great companies, no doubt. So high inflation environment is gold's played in. We shouldn't worry. We shouldn't think about equities in a high inflation environment. Equities will suffer one way or another. You can look at metals. You can look at OMCs. The problem, though, meaning commodity stocks, essentially. Muthoot Finance, for example, rose because of the high inflation environment. We were in gold was rising. The problem, though, Sniper Dog, is that right now we're not just looking at a high inflation environment. We're looking at a high inflation, low growth, stagflationary environment. Everything suffers there. Everything suffers. Gold is the only thing that outperforms in that kind of market. And if I'm not wrong, in 1 year, gold had gone 3x or 4x in the 1970s when we had this oil shock the last time. That's why I'm looking to enter gold. Or just keep cash. Your cash, if deployed at the right time, can be worth much more. High inflation environment means policy becomes tougher, right? Which means money goes out of the system, which means you're staying money. If you don't use it to buy things, if you invest at the right time when the markets turn, you will beat inflation by orders of magnitude. So that's what I would do. I wouldn't go into sectors. I'd go into bonds if I want that beat inflation. Zen might be good. Zen technologies should be good. Drones have basically become a necessity. They're like bullets now. Everyone thinks of drones as missiles. They're bullets. They're just modern day bullets. Okay, let me just recall Gravita India. Okay. Kind of recession proof, right? Like this will always keep happening. But P constriction, ho raha hai. That's what it seems like. And earning topping out bhi lag raha hai. Like this has grown too much for too long. There has to be a cyclical turn here as well. Maybe margins compress. I wouldn't buy these prices, is I think what I'm trying to say. IT, Arjun. For me right now, IT is one of the biggest ones. And within IT, TCS seems to be the best placed technically. Persistent is on the radar, HCL Tech, Tech Mahindra, they're all on the radar. High beta IT. That's sectorally, that looks to be closest to the bottom. I'd want to look into that. I was also looking at auto, two-wheeler auto though, Hero MotoCorp. Because recovery when it comes, I don't think it's going to start from the cities. I think it's going to start from tier 2, tier 3 rural. From right now, at least that's what it seems. But barring an AI wipeout, IT stocks seem to be the sector to go long, for me at least. Orient Technology, Amit, 1 second. I wouldn't. Too small a company at too risky a juncture for the industry. It might be a brilliant company. I haven't researched it deep enough, but I wouldn't, is my point. I might convince myself. But right now, this industry is going through such a massive change that unless Orient is on the other side of that change already, which it isn't, I know because no Indian company is, I wouldn't buy into it. The only company that so far from my research could still be behind because they might have made bold claims without being true, but Persistent is the only company that has actually kept pace. So if I'm buying IT, Persistent is one of those. Urban Company has a very bright future. If AI wins out, Urban Company might be the next Bajaj Finance. I know it's a cliche too, but that's an industry that's just AI proof. Urban Company makes for a massively good bet. That's a very, very intelligent ask. That's something I did not think about. I use it and I didn't think about it. So yeah, this is a stock. This one I'm going to buy into. This is going to go in my portfolio. Now, if AI fails, then I'll come out of the company though, because then this won't see as much traction. Slowly, people are going to realize that the kind of jobs they get done, AI can't do. Awesome. Awesome. Out and out data center company. It's going to sound off, Prasant, because they've made no declarations about this, but I would buy Hemisphere Properties because they have land and land connected to water and everything else, they could become a data center powerhouse, or they could just be bought out by someone else, and I'd still make returns there. So it might be a little off base, but I would look at that. I'd really look at that. So Azad Engineering, we're going to say face the same problem, right? Government balance sheet. Yeah, government balance sheet. All the industries here, right? The main source of funding is the government. All of these industries, and the government balance sheet is going to suffer. So Azad might not do too well. PB is a little too expensive. 80 ka P is not justified for any stock. Long-term rupee will always weaken against the dollar there. Now, unless the dollar breaks. But long-term, the rupee will always weaken. That's just how the economies are structured now. We're a high inflation economy, and they're a low inflation economy. Our target is 4%, there is 2%. So by 2% to every year, mathematically, rupee has to drop, because our central banks are already targeting that. Inflation is how this is measured, no? So if our currency depreciates by 4%, but their depreciates by 2%, they already win out 2% every year. More than 2%, to be honest, because वो compounding effect भी add करना होता है, but we're not going into that. Though over a long period of time, it becomes much bigger, but still, 2% to natural depreciation. Immediately, right now, 100 is a massive figure. So if we hit 100, I don't know, will we hit 100 or not? Because US is going to start suffering now. This was an interview by there's this guy who manages a family office. I was just watching a random interview, and he said that damn it, I just lost my chain of thought. So 100 is a, let's just leave it at that. I just lost my chain of thought. Sorry, went blank. Rupee at 100 is a massive thing. I don't know if that is going to happen. But if it does, then yeah, I got my chain of thought back. Perfect. So he said that one more leg of fall coming from the US market is pending in Nifty. This answers the other question as well, right? Nifty pe kya view hai long term. Another leg of fall is pending for the US market collapsing. Right now we've collapsed. And when the US market collapses, then the Indian rupee will strengthen against the dollar. So we might see this bottoming out happen. I don't think another more than 5-6% is in the works. I don't think that much will happen either. 6 to 12 months, we might see a rebound. But then I wouldn't buy the rupee against the dollar. It's because it's a long-term losing bet. Now, in a situation like this, I'd short it. And maybe if it goes close to 100, then I'll buy it just for a quick trade, but not positionally. Quite sustainable, Sniper Dog, because you have to realize we live in a very transient economy now. What I mean is, I have lived in this home for 5 years now, and this is the longest I've lived in a home since 18. 3 years in one college, right? Even if I count colleges. I've never lived more than 2 years, 2.5 years in one home. And every time I change, I need urban company, right? They can find me the right people, but now I don't even ask the gig workers for the number or whatnot. I don't want that. I want urban company to be responsible, because that is my safety, no? I don't want to call him outside and then have no insurance, because they are giving me an insurance against my work. There is a support center I can call. So I think we'll move towards that economy a little bit. That it's a challenge, yeah, that they can always directly connect, but it's still a good model to be in. It was a good question there, yeah. I know USD, no? So it's one of the questions that I genuinely don't have an answer to. Like, I don't have an answer to where the market will open tomorrow. If you ask me today, I can give you my gut feel that something's going to go wrong. Like, we'll see what is that called? A slingshot of sorts, right? A whiplash. I think that's what we're going to see. Maybe Trump says something great and the market, and something Iran does crashes the market or something, but I feel like something big, and I don't know why, but I feel like it's going to be on the downside. As a confluence of things, right? I feel like it's going to be on the downside, but I'm not giving a prediction for tomorrow. I genuinely can't. So one of two things is going to happen, Jyoti. Either we're going to see Bitcoin just become a 100-bagger, or it's going to end. Yes, I'm not really stuck on it. I just want to have a discussion with someone. Like, I don't want to start by explaining it. I want someone else to talk about it first. I'm not talking about tokenization. I'm talking about the digitization of money. Tokenization is a fairly simplish idea there as an outsider, right? I know that doing it would be very complex beyond my comprehension, maybe. But the digitization of currency and how that would work in the world, that's what I'm trying to look at. Amit, best small cap for 5 to 10 years. Bundada is a strong candidate. Knowledge Marine Engineering Works is another massively strong candidate for me. If you count it as a small cap, because तो 25,000 भी small cap ही होता है. Ether Industries is probably one of the best candidates. Nazara Technologies still stands as a very strong candidate. I'm sure I'm missing some because I'm so sleep deprived right now. But there are so many amazing stocks. If you're looking at 5 to 8 years, especially at these prices, there's a plethora of stocks. We can even count Delta Corp as a small cap right now. And 5x return to kahin nahi gaya usme. So there's plenty of opportunities. Guys, this has been absolutely amazing. Probably the best live session I've had. And that too when I'm late. You guys are downright amazing. The fact that you were here, thank you so much. Precision camshaft. But I have to end this now because I'm losing my chain of thought now. I'm starting my words and all that. And I don't drink. It's happening because I'm tired. So I'm going to start making mistakes now. I don't want that to happen. So maybe just a couple more questions and I'll be back. We can do maybe Friday till the market is closed. I'll be here again on Sunday. If you guys want, then I can do tomorrow as well, right? Just to go through what happens. We can do tomorrow morning or something if you want. I'll be fresh as well. Trump ka news aaya hoga. If you guys are free, if you guys want, just put it on the comments. Even if we get 5 or 6 people committing, I'll be here 8 a.m. You can do tomorrow morning 8 a.m. after Trump's speech. So precision camshafts is... My problem is this half of the thing. Because everything that happened after 2020, right, was liquidity driven. So if a company isn't performing here, I feel like there's some issue. Right? And the auto sector is anyway going through a cyclical downturn now. So I'd want to buy it at the bottom when my Tata Motors, when my M&M have bottom. That's when I'd want to go back into these companies. And then there's so many auto component stocks that I'd go into. But right now doesn't seem to be the time for that. Thank you. Thank you so much, everyone. Have a good night. I'll see you guys on Sunday then. We don't have enough comments for this. Sunday it is. Have a good night. Thank you for being here. Amazing. It's always my pleasure, Prashant. You guys make this happen. Thanks, Raghav. Cheers. I'll be up at 6:30. I'll post something so that you guys, whatever my understanding of Donald Trump's speeches, I'll post that on YouTube. Even if I can't make a video or live stream, I'll post it on YouTube. Thanks, Sniper Dog. Have a good night, all of you. Brilliant questions today. Absolutely amazing. Cheers.